Welcome back, traders, to Market Analysis 101. Don't forget to hit that like and also subscribe to get notifications every time that we put a new video on this channel. All right, so if you're new to this channel, I recommend that you look at the previous video so that you could get some sort of context of where we've been, what we charted. So let's look at today's session. And one of the things that we called out yesterday was that we were sort of creating, it almost seemed like we were creating some sort of bearish pattern, but at the same time, we also talked about the possibility of breaking out of this sort of pattern that we were creating, getting into that gap area that we pointed out as well. And so we did exactly that, right? So the idea here is not to predict, but rather determine where is the train going. And in this case, the train was going up, or at least it seemed like it was going up, right? So we punctured that gap area. But for some traders, you know, they're probably still scratching their heads on what happened here throughout the trading day. Obviously, Jerome Powell came out, right? The Fed was out. They did a Q&A session. And again, as you've heard me say before, I don't put a lot of stock into the news, but when Jerome Powell comes out, you know, it's worth listening to. It's worth kind of getting an idea of where the economy is going. Now, there's something very important that, you know, we need to separate here. And I think that there's another trader out there by the name of Alicio. There's another YouTuber out there that also talks about trading. I believe his name is Alicio Rastani. And I agree 100% with them that the economy and the market are two separate things, right? We cannot measure the market with the economy. It doesn't mean that there's no correlation. There is definitely correlation. Obviously, we're going off of what the economy is telling us. But most of the time, what we're trying to do is we're trying to predict based on what's happening in the economy. And the reality is that when you're looking at the economy and you're looking at the numbers that are being pumped out either by the Fed or either by the news, you got to take into consideration that these are lagging indicators, right? So we have to look at the tape at present. We have to look at what we have in front of us. And so what did we get today, right? We got a punctured through gap. And so what does that really mean, right? I think a lot of people expected the market to rally and fill in that gap. But like I said in the previous video, this was going to be sort of this danger zone. We were going to see some sort of pullback. And so we did. And so one of the things that we didn't want to do is jump the gun. We wanted to make sure that we are on the right side of the tracks, right? And so let's look at what happened. And I'm going to explain this because I think a lot of people fell into the trap. What is the trap? Well, that we jumped in, or rather that we punctured through the this gap, and they thought that we were going to fill this gap area right here. And so it almost seemed like that. But this is one of the reasons why, as I mentioned in the last video, we need to keep an eye on the futures. And although, you know, I call this the futures, this is not the futures. This is the US S&P 500. It's another way that you could actually trade. And if your platform allows it, then you're able to trade this 24/7. But, you know, again, it's very similar to the futures, and that's why I call it the futures, that it's open at all times. But mainly one of the things that we talked about yesterday is this area right here, right? We said, is this the pullback that we've been waiting for so that then we create another wave up, as in that third wave? Or do we still have to wait for the whole structure to play out? And you know what? Overnight, we got the full picture. And let me actually draw it out for you, right? So we said we were expecting a three-wave structure. And so here's that three-wave structure today. It's in white as we left it yesterday. We got that nice rally up that we rode. And then we got that pullback. And then we got another rally over the night. And so why is that important? Well, let's go back to our other chart. And let's look at the gap. The number starts at 31.34, around that area. I think the top to this was 31.28. The next top to this was 31.30. So let's say 31.30, and then we have this drop off right here of 31.81 and also a close of 31.90. And so the expectation was to fill that, right? So going back here again, the number is 31.30, around that area, right? So let's look at now what happened overnight. So overnight, we came in, we completed this uptrend here, came back, pulled back, And then let's look at that 3130. So we're at 3130 right here. And then we went higher, right? And the height of this was 3168. All right, so what did we do? Let's see. So if you could see this candle right here, this candle, the bottom of this candle is 3163. We essentially overnight punctured into that candle, trying to reach this area, which is that 3181 area, and we were short by like around what, $17 or so, but essentially coming in to fill some of that gap. And then what you got in the morning, it was a trap, right? The trap was people are going to think, hey, we made it into the gap, let's fill it up. And I said, this is going to be a danger zone. This is going to be an area that is going to catch people off guard. And so what did we get? We got a small pop to the top, right? Top of the morning. And here it is a little bit more closer in view. We started here off of the morning. We got a small little top. And again, everybody's thinking here, we're going to fill this gap. And all of a sudden, the rug is pulled. And we come down, tumbling down, tumbling down. I had completely forgotten that Jerome Powell was going to be on live and also taking fielding questions. And so at this moment, I took this trade because we have a gap right below. It was a beautiful trade. Why? Because as people are looking to fill this gap up here, we were looking to fill in this gap down here. Why? Because the market left a space here. We jumped up, we gapped up, and then so we went up and we got rejected, and then we were brought down. And what happened? We had to fill in this gap, right? So we filled in this gap. We pivoted from here. It would have been a perfect position to now take that pivot and take it all the way to the top. Why? Because it was going to try to make it back all the way to the top again. And so it did, right? And so along the way down, I took some profit, and along the way up, I took some profit as well. Then the last play that was available to us was this area, right? So this area became an area of contention. And so one of the things that we needed to keep an eye for is if the market had already filled this gap overnight, right? Or at least most of the gap. So where was the next target for the market? Well, obviously it was going to be down here, and then we get that pullback. Not being able to break through this resistance area, we broke down from this area, and we were going to try to fill in that wick right there. But at the same time, we had a trend line to contend with, and so that became a magnet. And so it's very important for us to understand and always keep an eye out for magnets. And what do I mean by that? Areas that are going to be areas of resistance or support. And so usually a trend line becomes an area of resistance or support. Your moving averages become an area of resistance or support. Historical areas of resistance and support also become present resistance and support. And so those areas become magnets, right? The market is then drawn to that area, and it has a habit to go and connect to those areas. So I knew that once we broke down right here, we were going to come and test that trend line. So I dropped off around the area of the trend line and the MA, right in between. Why? Because we have two magnets right there, right? And so those two magnets are also going to be working as support or resistance. And then we hit against that area of resistance, which was one support, where it all broke down, and the market was not able to get through that. And then it came down again, testing that MA, and then it came back up. So what do we have to account for? So we have this gap that we already filled today. So we have this rocket right up. We get this pullback right here, and we take the elevator up again. Now, what is the chart telling us? Well, there's a few things that the chart is telling us, right? Number one, let's look at our MACD, and this is at the 30, so let's go back at the 1 day just to get sort of a sense of where we're at. At the 1 day, again, we're right under right here. We're sort of curving up, but we got to be very careful in this area. Like I said yesterday, this is the area where we would call sort of a danger zone, right? Because a lot of things are happening at the moment, and we don't want to get over ambitious at this moment. So let's go back to the 30. So we got this one wave up here. We got a pullback. We're going to go back to the 5-minute level. And so let's look at this. Let's study this pattern. We have the rise up, we have the pullback, and now we're sort of doing a lot of like consolidation in this area. Now, there seems to be sort of a clue here. And what do I mean by that? I mean that whenever we get a pullback, usually our pullbacks have a two-wave structure, right? So let's paint that two-wave. We get something like that, and then we go down, and then we're able to pivot up. Right now, what we got was a pullback. We pivoted up, and now we're doing some sideways action, right? But we never came down to complete that second wave down. We never came down to that. I'm not saying that it needs to come down all the way to the 200 MA, specific to the 5-minute. I'm not saying that at all. But what I am saying is that we should have gotten some sort of structure. And, ultimately, you can try to make an appeal for this right here, right? Where we got a B, C here, and now we're going on our merry way up. But we didn't get that. So what are we left with? We're left with a sort of hanging man here, right? And so for some folks, that may mean a reversal pattern. So we have that, right, to note, in addition to the fact that we didn't get a fulfilled sort of second wave, which may mean that we might start seeing some more downside, right? We might start seeing that downside actually execute. But at this moment, we want to definitely be careful with this, right? We don't want to make the prediction that we're about to start moving down, especially when you're starting to see this also play out on our side, right? So there's a possibility that we're probably creating a flag to start making a move up, and then again, refill that gap. So we have to keep an eye on what happens overnight. When we wake up, we got to look at the futures, and we got to get an idea of what damage the futures has done, so that the rug won't be pulled right under us. And instead, we're on top of it and we understand where we're headed at. So how do we identify when this actually becomes bullish? Like I said in the last video, even if we get up here, it doesn't mean that we are already on a... All right, so even if we get up to this area, right, the area of filling in the gap, it doesn't mean that we've already become bullish and that we're going to continue our merry way up. Instead, we're going to have to contend with this small little area right here, and then let me expand that. We're looking at maybe 32.14, between 31.84 and 32.14. We're going to have to contend with this area, and once we are able to make it over that area, then can we say, okay, we are moving higher. Now, it's interesting, right? Because it's a small area to play with, but this is an area of previous support, which now becomes an area of resistance. In order for us to call this a green bull, we will have to get over this area right here. All right, so what's bearish? In other words, how can we identify if we're going to make another move lower? What we will see from the market is that the market is not going to be able to clear this area again, and we're going to see a rejection, and we're going to start seeing us getting below the wick, this area, or if not, we're probably going to have a gap down. In other words, we're going to start the day lower than this sort of hanging man that we have right here. So like I said in the previous video, and I've repeated over and over again, this was going to be an area that was going to be considered a danger zone. And so we saw that today, and we got to be careful not to become biased by what we hear or what we see on TV. We got to read the chart. We got to read the tape. We got to see what the data is telling us. So we're still not out of the woods yet. So this is an area where we have to be very careful. Again, taking into consideration that gold is coiling up, taking into consideration that we have sort of this hanging man here. And usually that means, now again, the market could do whatever the market wants to do, and especially it could do it overnight, as you've already experienced these past few days. But as for right now, the market is sort of leaning towards the downside, right? So we got to keep an eye on the lines. And again, remembering that we have these areas here to work with, and if we get above this area, then we're on the green side, right? And we can make money there. Not being able to clear this hanging man here and starting on the downside, that means we could make some money on the downside as well by either putting puts or by shorting. That said, this is a market wrap up. Let's keep safe and let's keep profitable. All right, see you guys.